Hello, and welcome to another video. In this video, I will talk about some of the most fundamental aspects of algorithmic trading. We will also discuss things like how algorithmic trading is very different from discretionary trading and the skills you need in order to start developing your own trading algorithms. And no, you don't actually have to be a programmer. We will also discuss the drawbacks and benefits of algorithmic trading. First off, let's look at what a trading algorithm actually does. The goal of an algorithm is to remove you from the equation, meaning your job is to develop a system that makes every decision on its own. It decides when to enter the market, when to exit the market, where to place stop losses and take profits, and how to manage risk. Now, there are exceptions of course. Some people like to take a hybrid approach where they have some discretionary elements. Here, they might choose the markets to trade based on fundamental analysis and then let an algorithm decide when to enter and when to exit. It can also be the other way around. Here, they let an algorithm pick the markets based on economic data, the analysis of balance sheets, or just technical setups. Then they decide themselves when to enter and exit the market. Then, you also have high-frequency trading algorithms, or HFTs for short. These are algorithms that use speed to front-run exchanges. If they can pick up on order flow before the exchange does, they can make money on front-running the exchange before they can set the price. Meaning, if they see an order coming into a certain market, they can buy into that market before that order is executed. This only takes milliseconds, so trading like this is not feasible for retail traders. In this video, we will be focusing on low-frequency technical trading algorithms that make every single decision. I believe this is the best method, at least for beginners, since it can be very hard to backtest a hybrid system thoroughly. So, what does an actual technical trading algorithm consist of? The most common types of algorithms uses technical indicators. These are indicators that try to determine things like trend, momentum, volume, volatility, and the likelihood of price reversals. This is probably the easiest way to trade algorithmically. Then, you have price action-based algorithms. These are algorithms that try to quantify price action patterns or candlestick patterns using math. This can be patterns like double tops, double bottoms, head and shoulders, support and resistance, trend lines, and the list goes on. This is quite a bit easier to do manually since there's no need to use maths to quantify the pattern. You can simply identify the pattern with your eyes. If you are programming the algorithms, however, you have to exactly specify what the pattern looks like using maths, and this can be quite challenging. So basically, a technical trading algorithm uses price behavior to try and predict future outcome. Let's take a quick look at an example of an algorithm that trades using indicators. This algorithm consists of two moving averages, one fast and one slow, and the MACD indicator as well. When the fast moving average crosses above the slow moving average, it's a buy signal, and when the fast moving average crosses below the slow moving average, it's a sell signal. And the MACD indicator tells you if you can buy or sell short. If the histogram is above the zero line, you're only allowed to take buy signals, and if the histogram is below the zero line, you're only allowed to take sell signals. And then you can use the ATR to determine where to place stop losses and take profits. Or you can use the moving averages to exit. There are endless possibilities and indicator combinations, so it's important to be creative. Just as a side note, understand that this was an example algorithm that I haven't tested. Do not trade it without testing it first. So, what skills do you need to build trading algorithms? I think it goes without saying that you should understand the basics of trading first. You need to understand indicators and price action patterns, and you need to know how to execute orders and manage your risk. You need to understand the different markets and how they operate as well. These are things that every trader, regardless of trading methods, should know. This is going to sound a bit backwards, but as an algorithmic trader, you should no longer see yourself as a trader, but rather you should see yourself as a strategy developer and strategy manager. An analogy would be, you no longer work at a business, instead you own it and you have to manage it. So essentially, you need to become an expert in developing strategies. There are many tools and skills that are very beneficial here. An essential tool are spreadsheets. You need to become the king of spreadsheets. Understand how they work and all the things you can do with them. You should see my Google Drive and all the spreadsheets I have. At this point, I probably have close to 1,000 different spreadsheets, and I'm not even exaggerating. You should also learn how to code. This is not essential, but it's going to be extremely useful in the long run, and you'll save an enormous amount of time. It's actually not that hard to learn, it just takes a little effort to get going. Once you start to understand the basics, it gets a lot easier. It didn't take me very long before I reached the point where I could code up any algorithm I wanted. Probably about a month or so of consistent practice every day. My tip would be to find free beginner courses on YouTube, and when you understand the basics, find a course for the platform you want to use. I personally use the built-in programming language in MetaTrader 4, which is called MQL4. This is more than enough for forex trading. However, if you want to trade stocks as well, then learning Python would probably be better, since you can also trade forex and any other market you want using this language. It's also generally a very useful language to know, even outside of trading. You also need to know how to backtest properly. For those of you who are wondering what backtesting is, it's when you test an algorithm on historical data to see how it has performed in the past. I think I'll make an entire video on this subject, since it is extremely important. Many traders make serious mistakes when backtesting, and I have as well. This topic deserves a video of its own, so keep a lookout for that. So, let's talk about the benefits and drawbacks of algorithmic trading. Do you want to let the system trade for you so you can go jerk off and play video games? Maybe you want to spend all day at the beach, knowing in the back of your mind that you're printing all the money you could possibly need. This sounds awesome, right? This couldn't be further from the reality of algorithmic trading. I would argue that algorithmic traders actually work more than most discretionary traders. I personally work between 3 and 4 hours every day. It takes time to find ideas and test them properly, and most of them will fail miserably. And that's sort of the loop that an algorithmic trader will go through. Find ideas, test them, and fail over and over again until you find something that might work. It takes patience and resilience to do this every day. You need to adopt the mindset of a hard worker and the expectations of someone grounded in reality. There is a reason why big institutions pay hundreds of thousands of dollars in salaries to employ people with PhDs in physics and mathematics. Trading is really hard, and very few people succeed. Now, what are the benefits? There is serious potential to make huge returns with a diversified portfolio of strategies. Imagine having 10 or more different strategies operating across multiple markets and timeframes, all of them compounding profits for even greater returns. This is every algorithmic trader's wet dream. Is one algorithm underperforming? Well, another one is picking up the slack. You can see how this reduces risk. Another benefit is that you can choose your own hours. You don't have to show up when certain markets open, and your algorithms can trade while you're at work or school, and then you can simply pick a time of day where you have the time to work. Now, if you're looking for a good place to start, I would suggest my indicator testing series. Here I test various indicators thoroughly and put the results into spreadsheets. I also build algorithms using the various indicators, and sometimes they're actually pretty good. Okay, that's it for this week's video. If you're looking to start this journey of algorithmic trading, you need to approach it with the right mindset and work ethic. It's probably what's going to determine the extent of your success. If you have any questions or feedback, feel free to leave it down below in the comment section, and I'll do my best to answer it. Stay tuned.